Alright, ladies and gents, so let's talk about why you keep missing entries, the mindset, patience, and when to keep or cancel a setup. Let's begin. Alright, understanding why entries are missed. So, number one, price not reaching your zone. Sometimes the market doesn't move the way you expect it to. You set a zone where you want to buy or sell, but price doesn't get there. It just simply doesn't reach your zone. I mean, it's that simple. Okay, it's that simple. Sometimes prices doesn't go there. It's nothing wrong with you. It's not that you're a dumb trader. It's none of that. Okay, it's just sometimes it does not reach your zone. But here's the flip side. Incorrect zone identification. This is like marking the wrong spot on a treasure map. If you don't identify the right areas, you might miss out on good trades. I will say this. Every now and then, yes, you did mark up the wrong zone. But that's okay. I'd rather you get an entry missed because you marked up the incorrect zone as opposed to getting into a trade that you're going to regret. So it's okay. Don't go crazy even if you marked up the wrong zone. And what I mean by marking up the wrong zone, I'm talking about like maybe you got it a little too close to liquidity. Maybe you didn't have a, I don't know, fair value gap or something like that. I mean, I'm not saying that you need to have a fair value gap. I'm just saying for some unknown reason, you just marked up the wrong zone. Okay, that's it. Now, poor timing or execution. Other times you might not act quickly enough, or you might hesitate, causing you to miss the opportunity. I know there's a lot of you that can be a little hesitant to entering in the market because you're scared, you might not know what you're doing, you don't feel comfortable yet, and that's understandable. You have a lot to work on, okay? Watch all my other videos or identify what it is that you're struggling with, and maybe even join the Discord and let me know. Now, the poor timing part, yeah, every now and then, guys, we have terrible timing. Sometimes we're a little too late, okay? We miss our entry. That's normal. Sometimes it happens, y'all. But the good part is that there's always another trading opportunity every day. And every day is another chance to make up for the loss, right? The next part is market noise, distinguishing between noise and genuine price movement. Example, markets building up liquidity and not actual structure. So sometimes you might think you're going to enter at a really good zone, right? You think you marked up the right one, but it turns out that zone is actually just liquidity and you end up getting stopped out. Or the market is still building liquidity and that's why it's not going to go to that zone yet, right? Because it needs to finish building up whatever liquidity it has to do, and sometimes it'll take a couple of days before price actually taps into that zone. Lastly, market volatility and its impact on entry points. The market can be unpredictable with prices moving up and down quickly. This is called volatility. High volatility can make it harder to predict where the price will go, which can lead to missed entries. So if you're someone that trades something like maybe NAS 100 or gold, you guys know how hard it is to trade those pairs. Okay, so if you can start off with an easier pair like maybe GBP USD or Euro USD or something, whatever, I don't know, anything else that's not super volatile, get used to trading that. Once you get better, then you can start moving on to those pairs, right? But again, there's still a lot that goes into trading those high volatile pairs, so you also have to keep that in mind. All right, now strategies to improve entry accuracy. So backtesting. By testing different scenarios, you can refine your strategy to make it more accurate. Furthermore, knowing that your strategy has worked before can give you confidence to use it in real trading. So if you're used to having missed entries during your backtesting, you'll realize that this is normal. Therefore, you won't go crazy or crash out on your desk. All right. Next, multiple time frames. Analyze the setup on different time frames to get a better understanding of the overall market direction. For instance, if the setup looks invalid on a lower time frame but still valid on a higher time frame, you might adjust your strategy accordingly. Some of you guys are just one time frame traders. I get it, there's nothing wrong with it, but just keep in mind that adding multiple time frames might actually improve your strategy in the long run. Next is setting alerts. Pretty obvious, but you'd be surprised how many people don't do it. Using trading platforms to notify you when price reaches your zone can be useful, especially if you can't be on your computer or phone all day. Set up those alerts, guys. Refining technical analysis. Getting better at reading price action in general and marking up your charts will boost your trading opportunities significantly. I've talked about this before, y'all. Use your tools to mark up your charts. Mark up your charts all the time. I don't care how dumb or insignificant it might be to you, but I promise you, you'll get better at reading price action and you'll get better at just reading your charts in general and seeing what's going on, right? Mark them up and you'll realize why your entry might get missed or why it got missed. Okay, moving on. All right, so adding less or more confluences. Sometimes we have too many confluences that we can't get into a trade until all the criteria is met. Or sometimes we need more criteria so that way we feel confident enough to get into a trade and not miss out because we might think that the trade won't hold. So, example 1. Let's say that the overall trend was bullish. You saw a breakup structure towards the upside and you also saw a couple of fair value gaps in your zone, but you didn't enter because you didn't see any liquidity. So you thought it wasn't going to be a good setup, hence why you missed out on a trade. So guys, something to keep in mind is if you're trading with the trend, it's okay to not have, I believe it was on my advanced microstructure video, type 1 liquidity, which is, you know, those little lows or those little lows or highs or whatever, depending on the trend that you're in. But in this case, it would be like little lows, right, that form or accumulate before getting taken out, you know, and then reversing back up. It's okay to not always have liquidity as long as you have other stuff to compensate for it. And one of those big things that can compensate for it is trading with the overall trend, right? Very, very important to keep that in mind. In example 2, in this example, you only have 2 confluences, right? A breakup structure and a demand zone. You feel like that's not enough, so you didn't enter, but sometimes it's okay to enter because if you're trading with the trend and on a higher time frame, like the 4-hour, for example, then your trade will more than likely play out. But please keep in mind, this is still fairly risky. So if you do choose to stay out, then don't be too hard on yourself, as this is understandable. And it's good that you exercise caution. So that's another thing, y'all. If you feel like you don't want to get into a trade because you know or understand, hey, this is not part of my trading plan, or I think these specific things are supposed to happen or I'm supposed to have in order for a trade to go in profit or for it to work out, and because of that you don't see that on your chart, it's okay to stay out of it. It's okay to miss trades, man. There's nothing wrong with missing trades. There's literally nothing wrong with it. That's you as a trader growing up, maturing, because now you're thinking, you're not using your emotions. Now you're saying, okay, I don't have A, I don't have B, I don't have C, therefore I will not do D. Okay, instead of going, you know what, yeah, I think it's gonna go up, or I think it's gonna go down. That's ridiculous, right? Now you're using your mind saying, you know what, I don't have this, I don't have that. Yeah, maybe I won't enter. And it's okay, guys. There's nothing wrong with that. Literally nothing wrong with that. Don't feel pressured by all these mentors or people that post up fake trades that they claim they took on Instagram or on X, right? Whatever. Do you, all right? As long as you're profitable, that's all that matters. All right, so keeping a setup active versus invalidating it. Let's begin. All right, criteria for keeping a setup active. So, order blocks. If the price is still respecting the order block, you might consider keeping the setup active. For example, if the price retraces to an order block and shows signs of a reversal after touching it, then it could be a good re-entry point. So as you can see here, the order block touched it once, came up, you might have missed it, but you notice that it came down and touched it twice and saw some candlestick pattern or some candlestick action. It's a good time to enter, okay? Next, market structure. If the overall market structure, higher highs and higher lows in an uptrend or lower highs and lower lows in a downtrend, remain intact, the setup might still be valid depending on what you're looking at. So if you notice there's a breakup structure here, right? You're noticing in this example that you're bullish. So there's a breakup structure here. And then you have another breakup structure. And you see, okay, you know what? I'm going to enter off of this order block. You realize that the entry was missed, but you You saw there was another breakup structure, so you entered here on this next order block. Next thing you know, TP, right? Real simple stuff, y'all. Real simple stuff. Next, liquidity zones. If the price is approaching a known liquidity zone, areas where there are likely to be many stop orders, it might still be worth considering the trade. Now, see, as you can see, there's some liquidity here, some equal lows or semi-equal lows. You'll notice I marked up this order block right here. It should have been a bullish one. I don't know why it's red. It should have been blue. My bad, y'all. But anyways, you'll notice that with the liquidity here, not too much, some liquidity, marked up my zone, price came in, took it out, and then went back up. So if you guys didn't see liquidity in one area and missed the entry there, but you notice that it built liquidity in the next area, then now is a good time. Okay, now is a good time. So let's move on. All right, so signs of a setup invalidity. Failure to respect order blocks. If price moves through an order block without showing any signs of reversal, it might indicate that the setup is invalid. So as you can see here, we have that bearish order block, right? We have some multiple breaks of structures, 1, 2, and you saw that candle closure. It's probably a good idea to just remove the order block and try looking for something else. Okay. Now, break of market structure. If price breaks the key levels that define the current market structure, it might indicate that the setup is no longer valid. For example, if an uptrend breaks below a significant support level, it could signal a reversal. So guys, if you guys see that you were predominantly bullish, but now you're starting to see like breaks of structure towards the downside, like for instance, this low gets taken out and then this second low gets taken out, you're probably going to have to start looking for some sells. Okay. Next is displacement. A strong move in the opposite direction can indicate that the market sentiment has changed, making the setup invalid. So as you can see here, you have some down structure, right? Let me zoom in for you guys real quick. So yeah, you have some structure going down, right? And then all of a sudden you have a strong move towards the upside with a big fair value gap. That is displacement. And price is more than likely not going to go back in its original direction. So always keep that in mind. All right, so some of you are wondering, what is the mental approach when price misses your target? So the first thing you need to know and remember is to keep your emotions in control. Stay calm. Don't let your frustration take over. It's like keeping cool or keeping your cool during a tough game. Guys, remember, this is kind of like a game that we're playing and we play to win. But sometimes we lose battles, but the point is to not lose the war. Next thing is reevaluating your strategy. Check if your analysis was correct. If you did something wrong, then make note of it. And if you didn't do anything wrong, then just understand it's the price we pay to play the game. You guys know that every now and then it is normal to have losses, especially if you already know this from your backtested data. Okay? That's why it's important to get as much information on your data to know whether or not you did something wrong or it's something that's just part of your trading plan. Lastly, learning from missed opportunities. Use missed entries as learning experiences. Maybe you need less confluences. Maybe you need to spend more time backtesting to understand your strategy full, or maybe just more experience. That's it. Maybe you just need more experience. It can be a number of reasons. The point is to not miss out on the opportunity to learn from your failures. Guys, there's a lot of things, but you won't know that if you keep letting your emotions take the best of you, right? You have to be able to control yourself and be able to say, okay, why did this happen and how can I fix it? How can I become better? That is the best advice that I can give you when it comes to this, okay? Always remember, there's always something to learn from our problems, from our mistakes in life. You can always learn a little bit of something, but you gotta pay attention. All right, so here are some psychological aspects of trading. So staying calm and focused. Trading can be stressful and it's easy to get overwhelmed by the fast-paced environment. Find something to distract you while waiting for your trade and when you are in one. Try working out, reading the good word, aka the Bible. And if you haven't read a book called Stealing from God, it's a really good book for people that are atheists or just, maybe have a curiosity of God. It's a great book. It helped me out a lot. and he keeps it very, very objective. You guys will be so surprised how good this book is and how you can make an argument for God without bringing in the Bible. Really, really good. And yeah, you can just look at my content too, man. Like, while you're waiting, study up, look at my content, get my viewership up, you know, maybe my subscriptions could do a little good. Point is, distract yourself, y'all. That's the point. Distract yourself. Next is avoiding unrealistic expectations. Setting unrealistic goals can lead to disappointment and frustration. It's important to set achievable targets, just like in a game where you set goals that are challenging but attainable. Pretty obvious, right? Long-term success. Setting realistic goals help you focus on long-term success rather than short-term gains. Consistent efforts lead to better results over time. Remember, guys, this is not a race, okay? This is not a race. I don't even know why you would think it's a race. Guys, take your time, man. It's okay. Take your time, G. You'll be alright. Chill, man. Y'all trying to move way too fast. Chill, man. Slow down. Learn what you gotta learn, okay? Because the faster you try to learn this and understand this, you'll be surprised how much longer it'll actually take you as opposed to taking your time. Why? Because if you start moving quick, you'll start missing the little things that actually make you profitable, and then you'll get frustrated, and then you go back to the beginning and actually take your time, and then you'll go, oh, that's what I missed. That's why I shouldn't go fast, right? Pretty obvious if it wasn't. Next, mentorship. Having a mentor can provide guidance and support. A mentor can share their experiences and help you navigate the challenges of trading. Join the Discord. Please join the Discord. I don't know how many times I'll tell y'all, join the Discord. I'm like, if you guys join the Discord, you know that I'm always trying my best to be active on there and answering people's questions. It's just like I said, I have so much stuff that I want to do for you guys that I haven't shared many trade ideas, I'm not gonna lie. But once I'm done with all my projects and giving you guys basically everything, because my whole goal of my YouTube channel is to make it kind of like a mentorship, but for free. Once I have all the videos out that I need to have out, all the strategies that I need to have out that I want to share with you guys, then that's when you'll see me be more active on my Discord, sharing daily setups, daily trading stuff, all that Gucci stuff, okay? But my signals are always active, that's for sure. So join the mentorship, guys. You will benefit much more from a one-on-one Q&A with me than doing it by yourself. It's just going to take a lot longer and it's unnecessary. Lastly, community support. Engaging with a community of traders can provide emotional support and shared learning. Join the Discord, learn from others that are on there, learn from me, ask your questions. Guys, I'm telling you, everything you need to be successful is at your fingertips, all right? Like and subscribe, my friends. Por favor, señor. Can you please like and subscribe? Alrighty, thank you guys so much for sticking to the end of this video. Thank you guys for liking and subscribing. I know that you guys like to subscribe. I know you did. You guys wouldn't do me dirty. Thank you guys again. And before I go, I have a little something for you as always. 2 Timothy chapter 1 verse 7. For God hath not given us the spirit of fear, but the power of love and of a sound mind. Ladies and gents, don't forget, man, at the end of the day, the Lord loves you. He wants the best for you. He wants you to join this side, okay? He wants you guys to not perish, but to have everlasting life. And, you know, to go to heaven. At the end of the day, that's kind of the whole point, right? You want to go to heaven. That's the whole point of choosing the correct religion, because you want to go to heaven, or a heaven. You don't want to go to, you know, damnation for the rest of eternity. That would suck. But yeah, guys, look up some cross-examine, man. If you're an atheist, if you're someone that, you know, is thinking about joining Christianity, or have questions about God or stuff like that, at least do your research on it. Look up Dr. Frank Turek and his YouTube channel, examine.com, or look up his book. I'm pretty sure you can find a copy of it for free, like low-key though. Okay, just saying. Other than that, y'all, that's all I have for you guys. Take it easy. God bless. You know I love you guys, and I will see you all in the next one. Peace.